If you only take away one lesson from tonight's special early Veterans Day edition of Mad Money, please remember that with the Fed poised to raise interest rates, it's time to circle the wagons around some of the powerful secular growth stocks that don't need a super strong economy to keep putting up terrific numbers. Take WhiteWave Foods, WWAV, the maker of organic milk and all sorts of plant-based, non-dairy alternatives, soy milk, almond milk, cashew milk. WhiteWave just reported a stellar quarter yesterday, handily beating the top and bottom line estimates while also boosting their full-year forecast. One of the few companies this quarter that did everything. And the stock jumped nearly 5% yesterday. It gave you a little 1.1% pullback. I think it's a buying opportunity. Don't take it from me. Let's dig deeper with Greg Engels, the chairman and CEO of WhiteWave Foods, to learn more about the quarter and where his company's headed. Mr. Engels, welcome back to Mad Money. Good to see you, sir.
Jim.
All right, Greg, you know that I've been behind you since the day you came public, and yet I find the last 6 months you have transformed the company from being a plant-based food company to having parts of the supermarket that I never thought you would have. You got to talk about the last two acquisitions. Got to talk about what you're doing in yogurt and what you're doing with Vega, because these seem big to me.
They are big, Jim. But before we get into that, I want to give a shout out to these great young men and women who've dedicated the next few years of their lives to serving this great country and defending our freedom. So thank you all.
Thank you.
Very much. Fantastic. Thank you.
Thank you, guys. Absolutely.
So these products, look, we are in a period in the food business that has a number of powerful trends going on inside of it. You've got natural and organic. You've got a move to diversify liquid and other protein sources. There are alternatives that are developing to dairy that are popular with consumers. And really, Wallaby and Vega play on those two trends. So Wallaby is the leading yogurt in the natural and organic chain. It's got just fantastic products, great opportunities to build distribution in the conventional channels with this product. And it builds on what is now, across our business, a $200 million yogurt platform between the United States and Europe. So we have a very interesting position in what I would call the more unique, high-value aspects of the yogurt business.
Fastest-growing food categories in the world,
where there's tremendous amount of diversification going on. So we like the way we're positioned here. We're very excited about Wallaby. It's off to a great start. We've owned it for a short period of time. Vega is another fantastic business. The nutritionals business and the protein supplement business has really been a dairy business, a whey protein business.
Yes.
There are lots of consumers, particularly women, who are looking for an alternative that's got great nutritionals, great proteins, also gives you 6 servings of greens in every serving of this product. It's fantastic tasting, great in smoothies, comes in a lot of different varieties. So this is a business that's been growing at 60% on the top line. It's got fantastic P&L, great gross margins, and the opportunity to take this set of products, I think, and this brand into a very, very broad set of opportunities. So if you think protein, you think shakes, so pre-prepared shakes, 60% of the business in grocery is ready to drink. We're not even in ready to drink yet. Great opportunities.
Now, something's happened in the last 2 quarters that we've got to talk about. A lot of people thought you were tied to Whole Foods. The truth is that you were really tied to mass market. Yeah, and I think that a lot of people are trying to pigeonhole you in organic and natural. In fact, I see more aisles in a traditional supermarket with really moves that you've made than almost any other food company, including the Millses, the Kellogg's. You're in the big guys.
Yeah, absolutely. So Horizon Organic, Silk, they started as natural channel businesses 15 years ago. They were among the earliest brands to move out into the traditional mainstream retail because they're in really, really big, or they've created big categories. So these are products that, by and large, live in traditional retail today. In terms of our total company, we're in the single-digit territory in terms of our natural channel sales. So we're really a mainstream food company in terms of brands. And we run big brands that we market to consumers.
But at the same time, and I look at snacks, and I just think you're this much in supermarkets versus what you can be.
Absolutely.
Because people love your brand, and they don't want processed food. And it's more glaring every time I see a quarterly report from the old guys.
Yeah, look, the consumer is changing.
Right.
The consumer wants stuff that is less processed, therefore they're shopping on the perimeter.
Right.
They want alternatives to traditional categories. That's what's happening in dairy as they seek more plant-based proteins and items that dairy traditionally had a sort of a lock on. And they're looking for stuff that's not processed as much. So what you're going to see from us is a continuing effort to find brands to add to our portfolio that leverage off of those trends. And you're going to see us take our brands and continue to extend them into logical places where we can leverage off what is great equity.
Right.
So Horizon, moving from milk to cheese, in yogurts to cheese and dairy-based snacks in terms of mac and cheese. In our plant-based lines, it's becoming much more than a beverage business, right? Yogurts are really big. They're 20% of our total sales in Europe. They're really coming up the growth curve in the United States. Great adoption.
The Cramer's still doing incredibly well.
Cramer's doing incredibly well. But you'll see us move, you're seeing us move with So Delicious into frozen desserts, for example. So lots of places where we can take these businesses and brands and continue to drive growth in our company.
Are the farmers keeping up with you? I know that it was harder at some point to source some of these things. The food chain is still plays to the old traditional guys. Are you able to get the agricultural business to see the future?
You know, farmers are the ultimate microeconomic beings, right? They respond to supply and demand and price levels and profitability. So in order to induce farmers to produce organic milk, you got to give them a margin. It's higher cost production. And where we really sort of fell down on organic milk supply was when returns in conventional farming were very high.
Right.
They've come down now. You're seeing more people convert. Same thing in leafy greens. You know, this is a now supply chain.
Oh, my God.
Right? We plant it.
Right.
We harvest it, goes in the bag, it shows up on your table in a very, very short period of time. So in this supply chain, because it's organic, there are a limited number of places that you can grow it. We have to be right on top of the supply chain. People will convert. You have to provide them an adequate return to do so.
Well, you sure are doing it, and this was a fantastic quarter. Best in show. That's Greg Engels, Chairman CEO of the WhiteWave Food Company. This is the biggest trend in food, and this is the best company at it. WhiteWave. Mad Money's back after the break. Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.